We have our session on financing for circular textiles today from 5 to 6 p.m. We have a very illustrious, I would say, panel with us today. We have the Ministry of Finance, Department of Financial Services, Ms. Mansa Gangotri-Kata, who has joined us for the special address of the session. And then we have a very illustrious panel of speakers, and I invite all of you on stage. Maybe I start with you, Madam Mansa Gangotri-Kata. Maybe we can have a round of applause for ma'am. And then we have Satyaki Rastogi ji from SIDBI, from Delhi. Thank you, sir, for joining us. We have Shailesh Unithan ji from State Bank of India. Thank you. Thank you, Shailesh ji, for joining. Venkat from Intellicap, Venkat Kotumaraju. Thank you, Venkat, for joining. And we have Alok Mishra from Welspun. He's the Chief Sustainability Officer at Welspun. Thank you, Alok, for joining us all the way from Bombay. And then we have my colleague from UNEP, Archana Datta, who's leading our work on textiles. Thank you for your patience, and thank you for joining us a little late in the evening, but I think that tells us that you're really interested in a topic which I think is so relevant and so important. So I think it's my proud privilege and pleasure to welcome all of you to the UNEP-FI knowledge session on unlocking finance for sustainable and circular textiles at Bharat Tex 2026. I'm Kavita Sachwani from UNEP-FI, and I lead our work on circular economy and pollution for banks, and I'm part of the banking team at UNEP-FI. And I'm particularly pleased to share that this session is also being recognized as an official side event of the World Circular Economy Forum, which is going to happen in Gandhinagar in Gujarat in September later this year. And that reinforces the growing global recognition that finance has a critical role to play in accelerating circular economy transitions. I think we've been hearing this a lot, but maybe at the cost of repetition, the textile sector sits at the intersection of some of the world's biggest sustainability challenges and opportunities. It is a sector that underpins livelihoods, exports, and economic growth, while also facing increasing expectations around climate change, around resource efficiency, circularity, and responsible production. We often hear that finance is critical for this transition. We've been hearing it in quite a few sessions that we've been part of in the last couple of days. But what does that exactly mean in practice? What is the scale and type of financing needed? Why are investments not happening at the scale required? And how do we unlock the capital needed from banks, from public finance, from development financial institutions, and private investors? So today's discussion is about moving beyond the why and moving to the how to answer some of these questions. Okay, so I'm very, very privileged to have with us Ms. Mansa Gangotri-Kata, who's Director, Department of Financial Services, Ministry of Finance, who has agreed to deliver the special address for today's session. Thank you, ma'am, for joining us once again, and over to you. Thank you.
Thank you, Kavita ma'am, for this good introduction for this important topic of financing the sustainable development of the textile sector. At the outset, I would like to welcome the distinguished panelists and representatives from UNEP and UNEP Finance and commend them on this initiative. As Kavita has rightly pointed out, the textile sector is the sixth largest exporter in the global market, and it contributes around 2.3% of India's GDP. Now, the sector also is one of the second largest employer of in India, specifically a major vulnerable sector of women, and also the key thing to understand is that this is a sector which is employing people in the tier 2, tier 3 cities, and which is something that has a significant impact in the economy. So as India strengthens its position in the market as a global manufacturing hub, it's also important that we follow the global best practices, which include ensuring resource efficiency, low carbon production, traceability, and sustainable supply chains. Now, these are actually something, as I can tell you, as with my experience as working with the trade negotiations, we have to ensure that whatever these goals are, they are not only helping in increase the production, manufacturing, market share of India, but that we should follow them so that at the most practical level, they don't become barriers to our trade. Now, at the outset, we need to understand that these considerations have been there for a long time, whereas the sector has been in operation for much longer than that. So there is a need to make sustained investment in, say, modernizing production processes, adopting cleaner technologies, and embracing the circular business models to ensure that our textile sector, specifically our MSMEs, follow the best practices for sustainable growth of the sector. Now, in this context, I would like to commend the collaboration between Ministry of Textiles and the UNEP program through the INTEX program. And it's commendable that they have they have tried to help in India's transition from the current linear take, make and dispose model to a more circular and resource efficient textile economy. And considering that a lot of MSMEs are involved in the textile sector, their focus on some of the sectors in the clusters in the rest of the country is very commendable. Now, apart from the policy and the technology, we also understand that finance is a big enabler for this transition. Now, with respect to MSMEs, the government has always been in support of addressing any needs in be it skill development, capacity building, technology upgradation. Apart from that, there's also a need for availability of finance. So for this, coming on behalf of Ministry of Finance, there have been several direct credit guarantee mechanisms available, like the mutual credit guarantee schemes for MSMEs and the recently launched emergency credit line guarantee scheme, which have improved access to finance and reduced the risk to lenders. So these schemes are run by the lending institutions where the loans taken by the MSMEs are backed by credit guarantee, so that we expect the banks and NBFCs, who are doing, or anybody else into lending, can take the next step, maybe the next leap of trusting the MSMEs to make a good return on their investment. And the government has also recently strengthened SIDBI through additional capital support and expanded its presence across MSME sectors, so that the access to institutional finance is available geographically also. At the same time, several digital initiatives have recently been launched, like we have the new credit assessment model for MSMEs and the introduction of credit cards for micro enterprises, which ensure that credit delivery is faster and transparent and inclusive. Further, for the financial institutions themselves, both for the microfinance institutions and the regulated entities, schemes such as the credit guarantee scheme for microfinance institutions and recently launched credit guarantee scheme for MSME support. These schemes show that the governments trust the lenders to make the right choice of ensuring the finance is available in a fast, efficient and transparent manner. Apart from this, for the traditional textile sector, this is also by the Ministry of Textiles, which is supported by Ministry of Finance. The PM Vishwakarma and Weaver Mudra scheme give affordable credit at a low cost with an interest subvention, encompassing skill development, and give market support so that artisans and weavers also benefit from this transformation. And going forward, there is a need for the financial institutions to support such investments in resource-efficient technologies, as we discussed, circular business models and cradle production. But all of this will ensure that can be achieved only when all of us work together. There is a need for the government and the financial institutions, the industry, trade body, and the DFIs and obviously the multilateral organizations to work together to ensure the gains, the knowledge that we have gained, the benefits of our efforts are spread throughout. And India has, I mean, at the end of it, I would like to say that India has all the ingredients to become a global leader in sustainable textiles. And we are here, I mean, all of us are here to ensure that the right financing architecture is available. At this, I would like to thank Kavita for giving me this opportunity to talk of the, to express our views on the financing of such an important sector. And I also congratulate the UNEP and UNEP Finance Initiative for convening this important dialogue so that we all learn from each other. Thank you.
Thank you so much. I think, thank you so much, ma'am. I think we all know that the Department of Financial Services plays a central role in shaping India's financial ecosystem and enabling access to finance for sustainable economic growth. And as India advances its ambitions around industrial competitiveness, MSME development and sustainable manufacturing, the financial sector will be very instrumental in mobilizing the capital needed to support this transition. So thank you very much, ma'am. Once again, your remarks have reinforced that financing sustainability is no longer simply an environmental imperative. I think it's increasingly becoming an economic competitiveness and development imperative. And thank you for sharing those insights on the models that are available and the schemes that are available and how we can leverage those. So to build on that context, let me now briefly share with you UNEP-FI's work on financing circularity in the textile sector and why it's increasingly becoming relevant for financial institutions. So I think it's a two-pronged agenda. One is the case for circularity in the textile sector and its relevance to financial institutions, because a lot of us when we speak to the non-finance community or even to the finance community, actually, the first question is, where is the linkage, right? So, I mean, maybe I'm going to take a few minutes to explain that and then give you a very high-level overview of UNEP-FI's work for financial institutions on circularity in the textile sector. Yeah, so before that, for those of you who are new to UNEP-FI, we are part of the United Nations Environment Programme, but we are the finance initiative of UNEP. And we bring together a large network of banks, insurers, and investors that collectively catalyze action across the financial system to deliver more sustainable global economies. So for more than 30 years, the initiative has been connecting the UN with the, financial institutions from around the world to shape the sustainable finance agenda. We work, as you can see on the slide, with more than 500 banks and insurers globally with assets exceeding $100 trillion to facilitate the implementation of what we call UNEP-FI's principles for responsible banking, principles for sustainable insurance, and principles for sustainable investment. So we work with institutions on a voluntary basis, and the initiative helps them to apply the industry frameworks and develop practical guidance and tools to position their businesses for the transition to a sustainable and inclusive economy. So based on the recent work that we have taken under UNEP-FI, I will share some insights on how banks can leverage circular economy principles to drive real world impact and achieve sustainability targets in the textile sector. Maybe before we get into that, I think we all understand the case for circularity, but very quickly, I think the textile sector emits between 1 and 3.3 gigatons of CO2 equivalent per year across its entire value chain, contributing to between 2 to 8% of global GHG emissions. And approximately 75% of these emissions originate from the production stages, encompassing the entire process from fiber creation, spinning into yarn, weaving or knitting into fabric, and finally garment manufacturing. So you can see from this slide that the distribution of climate impact across the global textile value chain and how it's spread, right, with hotspots seen particularly during the textile production and the use phase. And 41%, as you can see, is in the production phase and 24% in the consumption phase. So a value chain approach, I think, is required to promote sustainability and circularity in textiles, integrating natural resource use and environmental impacts with social and economic or socio-economic factors. In terms of the relevance for banks, what is the relevance of circular economy for financial institutions? Because sometimes this is not very apparent. I think we all know that resource use is the center of the triple planetary crisis. 55% of the emissions that we know comes from energy use, but the balance 45% comes from the way we use material. Again, it's also responsible for 90% of biodiversity loss and water stress. There's also growing regulatory and policy momentum on circular economy, we've seen that in the last couple of days where we've been talking about disclosure requirements, which also include circular economy considerations. And then circular economy is not just looking at it from it's also looking at it from an opportunity perspective. It's close to a USD 160 billion market in 2020, projected to go to USD 280 billion by 2030. And like I said in the beginning, financial institutions are now moving from the what to the how, which is basically managing the nexus between circularity and environmental and social impact, and how that can, and how banks can create that real world impact. On the right-hand side of the slide, as you can see, the principles for responsible banking, the 2030 strategic process focuses on 4 priority areas, which is climate, nature, healthy and inclusive economies, and human rights, reinforced by enabling approaches such as the just transition and circular economy. And now if I were to just share with you a very high-level overview of, I know this is a very busy slide, but I'm going to take a few seconds to explain this to you. So we started off in 2023 with the target-setting guidance for banks and financial institutions on resource efficiency and circular economy, and it basically talks about a progressive approach to set targets on circular economy, and specifically for financial institutions. The second bucket that you see there is basically, the driver of that is interlinkages, or the nexus between circular economy and climate, the nexus between circular economy and nature, pollution, healthy and inclusive economies. So we embarked on a series of work where we are trying to establish or support banks in operationalizing the nexus between circular economy and climate, nature, and healthy and inclusive economies. And then you see 4 sector supplements in the middle of that slide, which includes work on the textile sector. So how can including circular solutions across the value chain in the textile sector reduce GHG emissions? And then we have similar work in the agriculture sector, in the minerals and metals and mining value chains, and also buildings and construction. More recently, we've come up with sectoral finance guidelines, which provide a practical framework for financial institutions to systematically screen, assess, and finance circular activities. And they enable banks to identify new lending opportunities, manage emerging risks, and align with evolving regulatory requirements. And the last column that you see is basically UNEP-FI's efforts on creating system level change. So we launched a report called Unlocking Circular Economy Financing from Vision to Action, which is basically stressing on the need for multi-stakeholder approaches to be able to scale circular economy financing, which is something that ma'am said also in the beginning of the discussion. And then we of course have a circular economy community of practice, and we are, as we speak, embarking on circular economy pilots, which will help us move from target setting to implementation. Moving into these 2 specific pieces of work that we embarked on, which is circular solutions to achieve climate targets in the textile sector, which I talked about, and then the circular finance guidelines. Very quickly, this is a paper on circular economy as an enabler for responsible banking, specifically for banks, for the textile sector. And it has 2 main sections. One is identifying and financing circular solutions and opportunities with positive impact on GHG emissions. And the second part is actions to leverage circular solutions and opportunities in line with the bank's climate transition plans. If I were to, and I encourage you to go through this, it's all available on the UNEP-FI website. Again, this is a busy slide, I'm not going to take too long, but basically the diagram on this slide illustrates the process banks can follow to integrate circular solutions into their climate transition plans to achieve climate mitigation targets. So this is actually the core of the guidance, and the same framework runs at a sector agnostic level and also at a sector specific level. So this is also for textiles and for the other sectors that I talked to you about. And as you can see, the approach focuses on 2 steps. One is identifying circular solutions and opportunities, and 2 is aligning financial flows and banks' portfolios with climate mitigation targets. Moving to the next slide, this is basically how we look at identifying circular solutions and opportunities across the value chain, because UNEP-FI, and I think a lot of us who've been part of many of the discussions over the last couple of days talk about a life cycle approach, right? So we're not only looking at downstream, but we're looking at the entire value chain. So we talk about circular design and production, and what are the activities that you can do, or banks can do with their clients to be able to integrate circularity at the design stage, right? Then at the circular use stage, which is activities that increase resource efficiency by extending product asset life through reuse, through repair, through repurposing or refurbishment, or through product and asset optimization, leasing and sharing models. So that's on circular use. This is the crux of the guidance, right? Circular value recovery, I think this is something we all understand, activities that increase resource efficiency through recovery of waste. And then circular support is across the value chain. So this is the approach that we followed in all our, on all our guidances. And again, this slide is basically talking to banks about how they can integrate circular solutions and what are the actions that banks need to take to be able to create real world impact by clients, right? So banks can look at, when you say PRB action categories, it's principles for responsible banking, and the categories are basically 4, which is internal policies and processes. So how do we look at integrating circular solutions in internal policies and processes through client engagement, through portfolio composition and financial flows, and through advocacy and partnerships. And then there are subcategories of these actions. Again, coming to the circular economy finance guidelines, and that's pretty much coming to the end of my presentation. So these provide a practical framework to screen, like I said, to screen, assess, and classify circular textile activities across design and production, circular use, circular value recovery, and how to enable systems. And this, basically the textile guidelines is the first in the sequence of sectoral circular economy finance guidelines in all the high impact sectors that I talked to you about. And the aim is to support harmonization into origination, due diligence, credit risk and product workflows, use of proceeds, and sustainability linked activities. So these guidelines, like I said, provide a practical 3-step methodology to help banks and development financial institutions identify circular activities within client operations, assess the degree of circularity achieved, and then third is the interlinkages assessment. So does the activity account for and manage interlinkages with other environmental and social objectives? So I think that pretty much brings me to the end of what I had to talk to you about the work that we are doing. I do hope that the presentation has provided a useful overview of why circularity matters for banks, what banks can do within financial institutions or within their work, not only for reducing environmental impacts, but also as a strategic opportunity for financial institutions to support climate goals, strengthen resource resilience, and unlock new business opportunities. So I will conclude with one thought, and if there is a message, I would like everyone to take away today, is that no single institution can drive the circular transition alone. I think we've seen it in various forums, and I think that's why we have this illustrious panel here who's going to talk to us about various insights on how we can take this discussion forward. Before I get on to the panel discussion, I just wanted to share one more slide which reasserts the collaborative approach to circular economy financing in the textile sector. So financing circularity, like I said, is not simply about developing new products. It requires a collaborative ecosystem that brings together government, financial institutions, industry, development partners, and technical experts. And I think India is particularly well positioned to lead this transition. Ma'am talked about the textile sector contribution, etc., so I'm not going to dwell on that, but at the same time we are seeing strong momentum from government initiatives, evolving regulations, industry innovation, and increasing expectations from global markets as well. So the opportunity before us is therefore much bigger than financing individual projects. I think it's about creating an enabling ecosystem that connects policy, that connects finance and the real economy to accelerate investments in circular business models at scale. And that is precisely the conversation we hope to have over the next 30 minutes or so. So before I move into the discussion, ma'am, would you have any insights or anything to share on the presentation that I made very quickly? Maybe I'm going to give you the mic. You can go to the panel discussion. Wonderful. Okay. So I think I've already introduced the panel. Thank you very much to all of you for joining us today. We have, like I said, an excellent panel representing the entire financial ecosystem, from industry and commercial banks to development financial institutions, investment advisory, and the United Nations. And together, we'll explore practical pathways to accelerate India's sustainable and circular textile transition. Our objective today is to move from frameworks to implementation, from understanding the financing challenges to identifying practical solutions that can help accelerate India's sustainable and circular textile transition. So, like I said, we have with us Alok Mishra, Chief Sustainability Officer from Welspun. We have Shailesh Unithan ji from State Bank of India. We have Satyaki Rastogi ji from SIDBI. Venkat Kotumaraju from Intellicap, and Archana Datta, who's leading our work on textiles from UNEP India. Thank you everyone for joining us today, and I think I'll start with the first round. Maybe I'm going to sit down and take these questions. So Alok, if we start with you. Thank you, Alok, once again for joining us. And I think Welspun, as we all know, has been investing in sustainability and circularity for several years. So from the perspective of a large textile company, how is sustainability changing business strategy? And in your opinion, are customers and global markets creating new financing and investment opportunities?
I think, Kavita, two parts to that question. And if I answer the first part as to how sustainability is creating business value, that's, I think, at least for Welspun, I can say that there's an enormous business value which sustainability is creating. Because when you're looking at international markets, and I can say that because we are primarily an export-oriented business, we do B2B, a little bit of B2C. So the world around, and particularly textiles, the expectation has changed, and it has changed significantly over the last few years. There's a huge conversation around coal phase out. Everybody is talking about decarbonization. It's not just talk. I think it has come to a stage where business is being decided basis of how much emission footprint the product has. And my view is that this is only going to aggravate. You know, we are going to have more serious conversations. Business is going to get decided whether you are on this side of the line or that side of the line. We are also seeing the conversation which is in one form and manner about the CBAM. So you have a very significant impact that would come. So I think large businesses which are very export oriented, certainly sustainability is a value enabler by a big margin. Whatever we do, right from energy transition to circularity to sustainable resource consumption, I think all of that brings and impacts us in terms of how the customer sees us. And all of that, I would certainly say, has a very strong business connection. And what that has done is for us that sustainability is no more a parallel activity or a peripheral activity for the business. Sustainability is a core activity because, you know, the two ways the business is being, say, customers choosing companies is one, cost, which obviously is a significant factor. Quality, consistency, I think there's a lot of those companies who are able to give that. The differentiation today is sustainability because it's not something that you can do overnight. It requires sustained and continuous investment. It requires consistency in terms of your vision. So organizations who are able to do that kind of, and match the expectation versus what they are able to bring in the practice, they certainly have a big business opportunity. So yes, that's the first part. On the finance side, Kavita, it's been a sort of a mixed experience so far. Because yes, a lot of the change that we are doing has to be, you know, fresh investments. And you know, sometimes you have to do it on your own because the ecosystem, which is kind of getting prepared, is still not ready when you already have to do it. And since you are probably at a slightly ahead of the curve, you know, you can't really wait for the ecosystem to come in, and probably some investment has already happened. The largest investment is obviously happening in the energy sector, because one way that everybody is measuring sustainability performance today is carbon footprint. So to reduce carbon footprint, well, investments are required. And I think a significant investments are required. So maybe larger corporates may find it easy, but the medium and the smaller ones could find it little bit of tricky in raising finance.
Thank you, Alok. And I liked how you said that sustainability is a value enabler, and it's no more a parallel topic, but a core topic to Wellspun. So I think very well said on that, and also hear you on the finance part that you said you're going ahead and making those investments on your own. But I think the objective of today's discussion is to see how multi-stakeholder approaches can help us work together to scale financing for circularity.
No, absolutely. See, there's a long way to go. I could mention something that has happened in the past, but then there's so much more work to come.
Right.
To actually achieve circularity and probably the end business goal of sustainable textiles.
Right.
So obviously the finance is going to play a huge role, and we look forward to it.
Thank you. And I think with that, I'm going to move to Shailesh Nithanji from State Bank of India. Thank you, sir, for joining us today. So State Bank of India has been actively advancing its sustainable finance agenda, as we all know. And from your perspective as the largest public sector bank, how are banks beginning to view circular economy opportunities in sectors such as textiles? And what do you see as the biggest challenges and opportunities in integrating circularity into lending and client engagement?
Yeah, so, the point is that, as my previous panelist said, circularity is actually a necessity because, the resources are limited. So the resources are limited, and it becomes, by logic, an enabler, So to that extent, there has to be a business case. Now, if you have to have the banks involved, then there has to be a business case, right? So, and that is where the ecosystem comes into play. Now, there are certain, certain first loss guarantees, certain kinds of grants are basically required in case of, certain kind of, because this entire ecosystem is getting built. It is not there yet. The technologies, there are various kinds of technologies which are there, mechanical, chemical and all that. So that, we have to zero into one particular thing, which may not one size may not fit everyone. So that is getting built. And for a bank to actually lend, of course, we are dealing with the public's money, right? So the money has to come back. And the customer who takes the loan also has to repay it out of his resources. So how do we manage that? So the only way is that, yes, all of us has to come together. That was again suggested, that the entire team, that is the DFIs will have to come together. The suppliers will have to come together, as also the entire ecosystem, including those who are purchasing it. So there has to be a multifarious, attempt to make it mainstream, because that is where the policies come into play. Because Europe actually, when you need to export something, they need a certain amount of circularity. That textile will have to have certain percentage of circular element into that. Only then the CBAM is another thing which is coming into play. So what I was trying to say is that all these things make it more or less a necessity, because we are a linked world, right? And if we want to export, and if we want to actually gain benefit out of the FTAs that have happened, and MSMEs form around 48% of the exports. So for a banker, if I miss out on this sector, then actually it is something which I cannot afford to. That is one thing. That is one part of it, from the commercial side of it. From the other side of it, to ensure that that we are carbon light, we as a bank also, we need to see that our emissions, we have a standard that we have pledged ourselves that by 2030 we will be carbon neutral, and 2055 we will be net zero. So across all the three scopes. So because of that, all of these coming together, we need to have a system wherein the best way practical, as a practicing banker, if I have to make it happen, then one customer, say for example, in Arvind has done some work on that. So they actually bring in their ecosystem, that is the suppliers and the persons, people who actually buy from them, and there we can actually take one case at a time and see how to take it forward. Right. So if that happens, the lending can happen across the board. And for why it is not happening, because the data is not there, the structure is very fragmented. The way that it is happening, we have no ways to Underwriting is also becoming a challenge because we don't know. We only believe in the linear system, right? The circularity part is yet to come into play. So a lot of things will have to come into play for this to really succeed. But banks are beginning to take notice of that. Why? Because by 2030 we'll have around 300 billion worth of business in the textile apparel sector, of which 100 billion would be exports.
Yeah.
So that is a business case for that.
Yeah.
So we need to get into that. So we'll have to work together with like-minded institutes and the government. Like SIDBI will have to work more with them, perhaps.
Right.
The
No,
MSc Spice and MSc Gift and all that are things which they have come up with, which probably will have to link up more closely.
Yeah. No, thank you so much, Shaileshji. I think I like the fact that you said we need to focus on opportunities as well, and I think a business case is obviously something that we are working towards, and it's going to be some time before we kind of arrive at a solid case and then make those steps. So I think with that I'll move to Rastogi ji, to you. From SIDBI's perspective, what are the biggest barriers preventing MSMEs from accessing finance for sustainability and circularity, and what in your opinion needs to change?
So, thank you, Kavita. First of all, I thank UNEP for inviting me here. Before I answer your question, I think it's very important to bring out certain statistics, which is at the cost of repetition, which is very important. So if you look at the MSME sector in India, it's a huge sector. Registered MSMEs today are roughly around 6.3 crore, that's 63 million. Out of which, if you actually look at 60 million, yani 6 crore MSMEs are those which are micro in nature. Now, what happens to these, because of this, what the problems that they face, I will put them in four different aspects. One is a large part of them, because 99% of these MSMEs are micro in nature, they're informality, and they have a lot of information gap. So informality in the sense they will not have very strong accounts, very strong even the accounting system itself is not strong. Forget about the balance sheet strength. Their business practices are more on the semi-formal or informal kind of. So when they come to a bank for availing finance, it's very difficult for them to prove their creditworthiness. So that is one aspect where I feel for MSMEs this is one of the strongest drawbacks. Number two is we don't have any standardized sustainable taxonomy. Now, because there is no standardized taxonomy, it's very difficult for them to also understand what are sustainable investments. And even for the DFIs or for the banks or the financial ecosystem, it's very difficult for them to understand that this goes into sustainability. So they apply their own taxonomies, they apply their own methods, and the assessments are different. Even a similar kind of investment in a similar cluster would be looked at very differently by two different players, including the MSMEs as the bankers. The third aspect is information gap, knowledge gap. So these MSMEs, by the very nature, they are one-man show. The person is production, marketing, technology, finance, everything. That individual is everything. So he lacks all that information itself. He doesn't know what is available where, what the government is doing, where the enablers are sitting, what are the government schemes where they can take the benefits. And the second thing is that he doesn't have the technical expertise to assess what are the sustainable investment, which technologies suit him best, which technologies have proven that they bring in revenue as well as they reduce costs and also help in sustainability. And the last aspect obviously comes from the financial side, that is this sector, especially sustainability as finance, whether it's textile sector or any other sector, requires a very different orientation, requires a very different kind of a system to be put in place. In India, in banking system, we have only term loans and working capital. Now, if it is only term loans, working capitals, they are very, they do not understand the intricacies of whatever goes into sustainable finance. They do not understand that the returns will come later. So tailor-made financial solutions are still not there. These are the problems, and I think we need to look at that, how we go forward and actually address them.
I think that's a great segue to come to you, Venkat. Where do we see the biggest opportunity for innovative finance? I think that's the last point that Satyaki ji addressed. And how do you think initiatives like, or products like blended finance, catalytic capital, and partnerships, which we've all been talking about, help bridge the gap between commercially viable investments and projects that are considered too risky? I mean, from a bank's perspective and also a DFI's perspective. To you, Venkat.
Right. First of all, thank you for having us. I want to set a little bit of context very quickly before I get specifically to answering your question. First is, so we all spoke about how there needs to be a business case, right? But I think the business case, there is a trifecta that's in, it has to make business case for, of course, the financiers, the investors, the banks, and all forms of capital that they cover. Second is it has to make business sense for the MSMEs, right? Wherever they are on the supply chain. But the third one, which often gets missed out when we're trying to think of how do we solve the capital equation of the problem, is the solutions, because they are the ones actually building the products for the transition. Right? So when we think of an innovative financial solution, product, whatever it is, it has to solve for all three of them, right? Yeah. All three of them don't need to necessarily understand or be told about what is circularity or what is decarbonization. What's important to them is, does it make sense, because it's simple maths, right? And I'm sure Shailesh and Satyaki will understand. And so it's not about trying to, so the first premise is, or the first hypothesis for us is not to get everybody to start thinking differently. Right. Because if you go back into recorded human history, the first thing that we learn about innovation is most innovations are not born out of thin air. So we don't have to reinvent the wheel, right? So that's the second premise. The third one, and I know Shailesh, we spoke about this as recently as last week, is the problem is not capital, right? The problem is on how do we structure it? Yeah. The problem is on, so it's an architecture problem. And the problem is on being very clear across the ecosystem on what are we financing, how are we financing, and who are we financing, right? The argument, and I think a lot of 9 out of 10 conversations we have tends to focus on, and I think this is a very wrong debate that we hear in the ecosystem, which is trying to convince bankers and investors to become more risk averse, to become more brave. And I think that's a very wrong premise. And unrated MSME, and I think Satyaki, you spoke about the numbers, right? Most of them are so small. The trying to find an argument saying don't worry about the unrated or where they are rated and how small or how fragmented and risky they are, because that's not the right argument. The unrated MSME, which is somehow finds a way to back a solution which has a 5-year payback period, the banks or financiers want to give out only 3 years. The amount of effort that it takes to do the due diligence, the documentation, and Satyaki, you were making a reference on a similar experience that you were having with a different conversation, but it's the same philosophy, right? So if the amount of time and the cost of diligence is going to be far higher than the margin on a loan, it just doesn't make any sense to anyone, right? So what does that mean? What that means is, I think there are two, the timing of why everyone needs to come together, and that's precisely why, that's our reason for existence as Intellicap, right? Because we are building that connective tissue which actually lays the market infrastructure in place. So to get to that question, the first is, there are 4 dimensions of the capital problem, right, which we need to solve for. First is availability, then you have applicability, accessibility, and affordability, right? Eventually for MSMEs, it has to start with the final one, which is affordability. It has to make, they need to be able to afford it. But even when there is capital, and I think we made references to a few schemes and incentives, there's capital laying there. We know there is demand, we know there is supply, so that's not an issue. Applicability and accessibility is actually a key one which fits into that architecture that we need to solve for, right? And that's part of takes up a big part of our time and effort at IntelliCap, because we're trying to see how it starts making sense when you bring in different forms of capital, right? Capital doesn't exist in one form. And that's why the 4As framework for us has started showing us early signs of where our effort needs to be to really make the needle move, not for one deal, not for one unit, not for one MSME somewhere in Tirupur or Panipat, wherever they are, but it has to make sense for the entire market, because that's when it starts making sense from a size point of view, from an investability point of view, for anyone on the commercial capital spectrum. Right. But that commercial capital, anyone in the commercial capital spectrum to come in, you need someone who will be able to bring in a grant, someone who will be able to bring in concessional capital, somebody who is able to bring in the first loss guarantees and different schemes, because everyone starts making or starts addressing the ability to figure out one part of the risk that's associated with MSMEs, right? There's a risk. We can't have capital and offer schemes but still look at fitting them into the same risk matrix, because people who are not able to access it, people who knew about it were still not able to get it, will still not be able to get that benefit, right? So you need to be able to solve for that. So 4As, being able to bring in different forms of capital, not with the intent of subsidizing, because subsidizing doesn't work at scale. The final two propositions, and I'll end that with, is first, I think the regulations and the intent of the regulations that are coming in is perfect for addressing the core aspect of circularity, which is performance-based contracting. All the MSMEs that all of us want to solve for are beyond tier 1. Nobody has transparency or visibility on what happens beyond tier 1. But the brand and the tier 1 partners together can actually club and give access to the tier 2, and they can say, here is an incentive, here is a demand offtake, because once you're able to go the demand offtake, that becomes a soft collateral that any financier is willing to, and that came up in our conversation last week as well, right? So collateral, so how do we solve for collateral? So if a brand and a tier 1 partner can actually reach out and extend the supply chain financing that's anyways there, right? When you talk about SBI and SIDBI and anyone, all of these commercial players are looking at, and I'm just making a broader statement, they already have a plain supply chain financing. The question is, can we take that from a brand and a tier 1 who don't have an access problem, who don't have an affordability problem, but extend that to a performance-based contracting and an incentive saying, if you're able to reduce your water consumption, energy consumption, whatever, by X, here is an incentive that will help make them access this financing, right? And the second one is the one, and I'll probably cover that in the second part of the question later on, is we focus on making it economical or viable for one unit and one solution.
Yeah.
The first thing that has given us very exciting results, and what we're very trying to do this at scale across different clusters across India, is how do we aggregate the demand and the sites, right? So I'll give you a picture. One boiler will always remain a unfinanceable, risky, very small size proposition for any financier, any investor, any banker.
Sure.
40 boilers put together, right? Their collective collateral, their collective credit worthiness, their collective risk, which you can actually surface, and the fact that there are a bunch of brands and tier 1 operators who can stand up for a cluster of 40, 50, I'm just taking boiler as an example, right? We've seen that
Yeah.
work for biomass as the transition fuel, common briquetting facilities, common water effluent treatment plants, and so on and so forth. It becomes an asset class.
Yeah.
And that's super important because that's beneficial for any banker or investor, because their benefit is not just about losing out on, and I'll quote Shailesh, right? He's saying we don't want to lose out on the fact that it's an important sector.
Yeah.
But when it starts becoming a new asset class, it starts becoming a new portfolio of products and hence adding on to my existing business, then we've got them on the table.
Yeah. Yeah.
Right?
Absolutely.
So I'll leave with that and then.
No, I think I couldn't agree with you more on this, on the need to have fit for market and fit for purpose products, and I think that's where we need the multi-stakeholder approaches to kick in. So with that, maybe thanks Venkat for that, for explaining that, the need for that so clearly. With that, I think I'll move to Archana. Archana, through the Intex program, we worked closely with manufacturers and ecosystem partners. What are some of the common investment needs that you're seeing across the sector, and are there opportunities that perhaps the financial sector has not yet recognized?
Thanks, Kavita. And I think, being a last speaker, I can take the liberty of, being very short and concise with my answers, because almost everything has been covered by the previous speakers, and they're all experts in the financing sector. I'm not. I'm an environmental management person. Overall, I think Mansa ji, in her opening speak, she already mentioned that there is a need for a sustained investment in the tech upgradation and modernization of the sector, and that's where I think from our interactions within these clusters, we've also felt that there is this need to, specifically SMEs, which form the backbone of the sector, there is a need for adopting more sustainable and circular financial practices. Many textile manufacturing, specifically, the dyeing units, the smaller, units which are operating in the sector, they need financing to upgrade technology. They need financing to, adopt some of these circular solutions, circular business models. Another emerging, and I think Alok also mentioned, with regards to energy, there is a need for decarbonization, and there is, need for investment in supporting that decarbonization strategy. Another emerging point that I see and I think would be relevant is also a lot of these SMEs are now facing increased compliance burden. With all these emerging regulations that are coming, specifically, for example, the digital product passports, having data on digital platforms, etc. And that's where I think this is another element where they would need financing support from the financial institutions to, support this transition and help them also, cover that compliance part of things. I mean, compliance, it seems it's not a direct investment need, but indirectly it's a lot of effort, it's a lot of investment of time, energy, and it's indirectly linked with also technology upgradation and upgradation of overall framework within which these small and medium sector enterprises operate. So I think I'll stop here, and speakers before me have already covered.
Thank you, Archana. I think so. We've heard about the challenges and maybe some opportunities also from both the demand and the supply side of finance. I think we'll very quickly move to the solutions, and then maybe I'm going to come back to you on that, Alok. So if you could ask the financial sector for one change, and you're on the other side, right, that would make sustainable investment easier, what would that be?
Well, I think I take something from Satyaki, what he mentioned, ki sustainability or sustainability-linked projects, they can't be seen from the same lens as typical projects are seen. So you have to have some, say, flexibility, if I may say so, not necessarily, it could be, of course, on the ROI as well, because a lot of sustainability projects do not have a very short ROI. So you have to have that kind of an understanding. So appreciation around that sustainability projects are long-term projects. They do not really necessarily meet all the financial expectations of a typical project, I would say that would certainly go a long way facilitating, you know, the approaching to the financial institution.
Sure. Thanks, Alok. Shaileshi, looking ahead, what role do you see for collaboration between commercial banks, DFIs, and the government in scaling finance for India's circular textile transition?
Yeah, so as I touched upon briefly during my initial this thing, it is absolutely necessary for all of us to come together, because only then, because as Mr. Venkat also talked about, I mean, there is a need for all these players to come together. For example, DFIs have a role to play, right? And especially, we also deal with multilaterals as well, whether it is ADBs of the world or KFWs of the world or World Bank. So we are also able to get them on board, right? And the finances that are available are at a cheaper rate, so relatively cheaper as you compare it. Maybe at least a 50 basis point or a 60 basis point differential is there. And we have used that finance actually in the renewable sector. We have done it very well in the Prime Minister Prime Minister Surya Ghar, wherein almost 100,000 plus houses, rooftops we were able to finance because of this method. So that's one way of doing it, wherein we can give them lower rate, pricing which is lower. In fact, we're already giving lower pricing. For example, if EV vehicles we want to purchase, we can give you 25 basis points less. Similarly, if it is sustainable housing, then, it's another 25 basis points less. So across the board it is there. And actually we are also looking to see how we can improve our product, because products will have to be there. See, as I look at it, to make it practicable, it has to be templated. Okay, if it is templated, for example, I was reading upon that, the EBRD or some, they have a product which actually says that, okay, fine, this is what you want to do. These are the various products. These are the various appliances that you need to buy to bring down your, energy cost. If so, this is then the price. This is the finance I'm willing to give for that. So all of them. So that's what I meant when I said that all of them have to add up actually. So when you do that, it makes a business case as well, because somebody is doing the first loss guarantee, so that part is taken care. Somebody is willing to put in, the DFI is willing to put in that part of it. So if I were to take say 20% off, so then I have that 80% which to lend. That becomes a much better proposition. And as Mr. Venkat said, I'm all for this cluster-based approach. So if you were to go for a cluster-based approach, then it is essentially an SSG kind of lending, because all of them come together and it's a whole, and everybody is responsible for that. A sewage treatment plant can take care of, one sewage treatment plant can take care of say 10 different SMEs. So that's how it works. So basically, to make it simpler, we'll have to make it happen. We'll have to template it, and we'll have to have some enabler policies. Of course, the government, PM Mitra and all have come in, so we'll have to use that in a bigger way. Also, some of the policies, the schemes which are there of the SIDBI, which the government has again brought in, that also will have to be propagated. In fact, I think, SBI is doesn't have an MOU with SIDBI for that. It's basically for BOB and others have. So we can actually, if they approach us, we can actually send it for subsidy to them, but there's a long drawn process. So what I meant is that to make this processes simpler, to team up with various ecosystem players, and to see that it becomes a risk mitigated product. So then it moves, then the needle moves, then everybody benefits, everyone, it's a business case still, but then everybody benefits.
Yeah, no, wonderful. Thank you, Shailesh. I think coming to you, Rastogi ji, how can public finance from a DFI's perspective help crowd in commercial banks and private investment into sustainable textile value chains? And I think we know that India has significantly increased public investment to support the textile sector's transition. Beyond providing direct support, how can these public investments catalyze commercial finance, private investment and FDI? And what role do institutions like SIDBI play in leveraging public capital to crowd in much larger private financial flows, particularly for MSMEs?
Yeah, so see, to answer that question, I'll start with another question. Why would a private financer or a private investment come into anything? Largely because they would look at, one, that wherever they are investing, whether they are getting some reasonable return, the loss risk is low. So that's another thing. Not only return, but they have to look at my capital should not be lost. And the third important thing is whether it serves the purpose or the objective for which they are. This is where the private investor would be, these are the things that they would be looking at. Now, where I see the role of public financial institutions or DFIs is being able to create models where, which are viable, number one. Number two, to ensure that, to be able to demonstrate that by these interventions, there are cash surpluses generated by the borrower or the investor, investee company where they are going to private fund is going to come. So once they are able to look at that, then it is easier for the private investment to flow in. So the role of public financial institutions, I would see, is, especially the DFIs, is that they have to play the role of enabler, they have to play the role of market maker. Now how these market makers, these DFIs are in a better position probably to attract international funds coming from these multilateral agencies.
Yeah.
So the DFIs can look at going in for blended finance, using the entire ecosystem. It's not directly their funding, but using the entire ecosystem. So maybe the finance, as Shailesh said, that finance may become a little bit cheaper for the
Yeah.
MSMEs, which makes their overall operations more viable. There are other methods of doing de-risking we can do is by risk sharing facilities, where although we have CGT MSE, we have NCGTC, but still anything that's an additionality is always welcome. So there may be some very core textile sector specific risk sharing facilities that will help in that circular economy. So there are many other ways of doing these. But the role I see for DFI is very clearly that they have to be the market maker. They have to be actually the institutions will demonstrate as to how this can be done.
How this can be
Scaling up will be then left to the others.
Wonderful. I think on that note, Venkat sir talked about, Satyagiji talked about blended finance. So can you tell us what it actually can look like? I mean, maybe can you share an example of an innovative financing model that you believe could work well for our textile sector? Very quickly.
I'll have to tread very carefully, and I'll probably say something which is a little controversial. Some of you will agree or not. Blended finance is very abused word, and I think the biggest myth is about the fact that blending finance is all about subsidizing and covering somebody's risk. I don't think that is the case. I think the philosophy or the best way to really leverage blended finance is looking at it at a philosophy and saying, if it's not just about bringing pool of capital to make it cheaper for somebody or subsidizing somebody else's skin in the game, so to say, but it's about saying how do we structure it in a way that it addresses every aspect of that capital problem for somebody. It has to make sense to, let's say, I'm just giving an example, right? Somebody who's been in Panipat has been doing this for 20 years before we gave it a term and a nice fancy thing called circular economy, or somebody who's been in Tirupur and been doing ZLD for a while before it came on everybody's radar, right? So blended finance, I think, is a philosophy and not necessarily a product. On the specific example, because you rightly said it's solution, so I'm going to put on the solution hat. We have, because we've been working with about roughly 250 odd manufacturers across different clusters for the last 6-7 years. And we've set ourselves a very ambitious task that by end of 2028 or 29, we will help at least 250 to 300 MSMEs adopt decarbonization solutions and at least mobilize $150 to $200 million. And I'm saying this out loud because it's a commitment that we've made. We've got a cluster of 50 manufacturers who have on paper made a commitment before electrification becomes economically viable to go through a transition fuel and saying whatever remaining part of coal, remove it and we replace it with biomass. We've got 50 manufacturers aggregated. It starts making sense because the cost, the capex gets split instead of each manufacturer having to bear the upfront capex investment and then wait for the supply chain, the farm to factory gate supply chain to be built. It's one common bricketing facility. So we built it around a shared economy model. We've been working with these guys day in and day out. They now have it on paper. They've come to us saying, given how they've seen us work and create value. It starts making sense all the way from the smallholder family at the source of the biomass, responsibly, sustainably sourced. There are MSMEs in the value chain who will process that and convert that. There's a common bricketing facility closer to that cluster that will be set up. the upfront capex gets split, the operational cost gets built on a pay-per-use model. So nobody is paying for a size just because it fits in economics, but they only pay per use. But the aggregation and the fact that it's an opportunity to finance one common briquetting facility that services 50 large or 50 MSMEs, no, sorry, not large, 50 manufacturers co-located at the same proximity. And we started with a fundamental premise that because you're co-located in the same facility, you're guided, governed, inspired, motivated by the same state policy.
Right.
So there's no difference. The utility costs or the basics of what you face on a day-to-day basis are the same. Because if you're neighbors, you can't say, my use case is different. And the beauty of this is none of these guys have come because somebody is asking them to do it.
Yeah.
They've taken this step on their own
Yeah.
because they feel that's the best thing to do and that's the right thing to do, and that is going to help them position in the global brand market.
Yeah.
And similarly, we've got these use cases for renewable energy, for water, and so on and so forth. But aggregation, cluster level models is already showing us results.
Wonderful.
We've been speaking with the capital providers because of the nature of what we do, which is building the ecosystem and the market infrastructure and having access and having worked with capital providers on all the spectrum.
Yeah.
And we've done these individual working with demand side folks and the supply side folks, which is, you know, helping, and Satyaki, you spoke about having a unified taxonomy. We've been working with banks, financial institutions, DFIs on setting up unified taxonomies, helping design and develop products, but also building a pipeline which actually sees that green capital, sustainable capital, or circular economy financing actually flow into in large numbers.
Yeah. No,
So
I think
that's a very specific solution. We know it is working. We know it can be replicable. But I think somebody made a reference to CGTMS3. That's actually an existing playbook that happens at scale in India. So going back to your first question, we don't need to innovate. We just need to think differently. And for 3 or 4 of us to come together at a table, and I can promise you I'll be the last one to walk away from the table.
I love your sense of optimism and calling all this loud, and I think there's this sense of urgency and purpose that
Otherwise,
we all
there's
see
no point in being
together.
here. If you're not an optimist, there's no point being here.
Thanks. Thank you, Venkat. And I think maybe in the interest of time, Archana, I'm going to skip your question on any other countries or any international lessons that India can adapt when it comes to financing circular textiles, if that's okay. And I think the audience is also being very patient. But maybe one last rapid fire round for everyone before we close for today. In like maybe one word each, okay? What is the one action that could unlock the biggest increase in finance for sustainable and circular textiles in India? Maybe we start with Alok and then move to Venkat. One word.
Please repeat the question.
What is one action that could unlock the biggest increase in finance for sustainable and circular textiles in India?
I would feel having a uniform sustainable taxonomy could be that one thing.
Wonderful. Rastogi ji?
So actually, Alok said what I wanted to say. But
It's fine for you to repeat it.
No, but having said that, I think we need to unlock capital, which is affordable for MSMEs, I'm talking about. So capital affordable for MSMEs.
Capital, right. Shailesh ji?
Yeah. So ecosystem and cluster-based financing.
Okay, very clear. Archana?
I think it's the same thing, no? Collaborative ecosystem. We've all been talking about that. So I think that's the key point that I would like to raise.
Thanks, Archana. And Venkat?
I'll apologize to everyone, but I'm going to give a cheeky answer. Because Satyaki and Shailesh mentioned something which takes up a lot of our time and effort. I'm going to say the unlock is for Satyaki and Shailesh and me to get together and figure out how to make this happen.
I'm sure we're doing that, okay.
That offer.
Thank you. I think on that note, I think we've heard some excellent insights today, and that really deserves a round of applause from all of us, okay. From the financing needs of industry and MSMEs to the evolving role of commercial and development finance, I think the importance of innovative financing mechanisms and the role of public policy in catalyzing private investment. So I think I'm not going to attempt to summarize today's discussion, but I think it's highlighted one important message. The challenge, I think, is not lack of ambition. The technologies exist. I think we've been seeing that over the last couple of days. Businesses are investing. Public policy is evolving. Financial institutions are increasingly recognizing not just risks, but also looking at opportunities. So I think the next big step is bringing these pieces together, right? To create the partnerships, to create the financial products, and enabling policies that allow sustainable and circular business models to scale. And I think we all agree that circularity is not just simply an environmental agenda. I think it's becoming increasingly a competitiveness agenda, an industrial transformation agenda, and a financing agenda. So I'd really like to extend a sincere vote of thanks to all of you. I'm not going to take everyone's names in the interest of time. And a special thank you to Mansi ma'am for patiently listening to all of us and carrying these messages back to the Ministry of Finance. Thank you to the Bharat Tex team, the Ministry of Textiles, UNEP India, UNEP FI, and all our partners for making this discussion interesting and possible. If there is time, maybe one or two questions from the audience. Otherwise, we can wrap up. Yes.
Thank you for sharing all your experience and your wisdom. Our colleague from SIDBI mentioned that, the problem is we don't have a taxonomy, clearly. And the colleague from SBI mentioned, well, we need templatable scenarios. You mentioned EBRD's Green Technology Selector, where all technology which goes through R&D and payback period goes in there. Any of the member banks then don't do any more due diligence, yeah? Or they reduce the amount of due diligence. So for India, are you all planning as to who will take that step to say creating the green technology selector, take technology available in other countries and move ahead? You mentioned about the taxonomy. Well, the G20 Sustainable Finance Working Group, especially for textile, came up with a set of case studies from China, Huzhou. They also talk about the just element with 40 basis point reduction. Has this been evaluated for India and considered to be not applicable, and hence we are not doing it? Or are we looking for a convener who will say, okay, I'm going to set it up? Thanks.
Yeah, so if I were to take that question, I mean, my part of it at least. So let me tell you that we have actually 100,000, more than 1 trillion worth of green assets, okay? So that has not been conjured out of thin air. Actually, a lot of effort has gone into it. And especially the Prime Minister Surya Gar, almost 60% of that has been done by SBI. So again, we're not talking in thin air, right? So there is a reason why we're saying what we are saying. If it has been a success, and if rooftop solar financing has become a success, then SBI has a big role to play in that. I can talk about my institution. And as far as, and see, basically, we'll have to come together, right? And we have to have an open mind. And, that's why we have come here, right, in the first place. So we're not asking anybody to do it for ourselves. We are just brainstorming and find solutions.
So, as Shailesh said, in SIDBI also we have our own green taxonomy. We've already that framework. What I was referring to is having a standardized taxonomy for the country. As far as I know, I think DEA has already come out with a draft taxonomy. Now it is for the other ecosystem players to see that and then give their feedback to the DEA, so that DEA then finalizes the taxonomy. As far as, like Shailesh said, see, we are also talking out of experience. SBI is a very big player in the market. We balance sheet size wise, we are 1/10 of their size. But we have also we have different roles. Yes. But today in the green ecosystem, today we have a 15,000 crore worth of sustainable assets. So it's not that we are talking about these things out of the blue. We have experience, and that's why that experience we are just trying to share with us, so that we find solutions or even other suggestions which can take us forward.
Sorry, if you don't mind me asking, could you introduce yourself, please, sir? It's a very good question. So, wanted to understand.
I'm the Bureau Veritas. We are involved in environmental due diligence and impact verification.
I'm familiar with, but thank you.
Thank you, Rakesh. Any other question? One more, and then we wrap up. There's no other questions. I think maybe we thank all the panelists. Thank you, Mansa ma'am, for joining us for the entire duration. And we have a small memento from the Bharat Text team for all of you. And if I may just extend that on behalf of all of us here. Sorry, I'm doing all the honors myself, but thank you.